Dutch Freedom Party just announced that they were going to try to put a referendum on the ballot to pull themselves out of the EU. And then Marine Le Pen, of course, in France, is anti-EU and anti-Euro, and she's the most popular politician in France right now. So basically what Brexit did was set the stage for several years of new political chaos. Well, that could be one of their endgame scenarios where they just throw up their hands and say, all right, let's just let it fall apart, and then we'll find some bad guys to blame it on, like speculators, for instance. In that sense, we created a narrative in which there are bad speculators out there who are responsible for crashing the market, and the government can be the good guys who are swooping in to protect the little guy.
Attention hard asset investors. If you want to maximize your gold and silver holdings, consider owning businesses that own a massive amount of the metal, who will benefit the most as the world witnesses the mother of all gold rallies. With 10 million ounces of gold resources through acquisition, this $2 stock just received a $3.30 price target from Cantor Fitzgerald. Learn more at crushthestreet.com/gold2016.
Hello, everyone, and welcome into crushthestreet.com. What a day to be speaking to John Rubino of dollarcollapse.com, a favorite here at Crush the Street, one of my favorites actually to interview, following the results of the referendum. The Brexit happened, and we're going to be getting John's thoughts on this. And man, John, so much to talk about. Thanks for joining me today.
Oh, sure thing, Kenneth. Yeah, we do have a lot to talk about today, don't we?
John, I got to say, last night I was watching my Twitter feed with my chips and salsa. It was like the Super Bowl for a guy like me who isn't into sports. And watching gold prices, watching the futures, I think I watched the Dow Jones drop like 700 points on the futures last night before I went to bed as Brexit became more of a reality. And gold was up over $100. And currency fluctuations with the pound down to 30-year lows. The yen surged as the dollar dropped, and even the 10-year bond spiked down to below 1.5%. John, let me start you off with this. Why the hell does the market care so much about this specific crisis story of the week?
Well, Brexit is a big deal for 3 or 4 important reasons. And first of all, by the way, I didn't think it would happen. It seemed really unlikely that the vote would go Leave's way, especially as strongly as it did. I figured that the undecideds would break towards staying, because people who are undecided right up until the day of vote usually end up being cautious. And then I figured the powers that be would just steal the election if it was close, because that's usually how it works in this world. So, you know what? Congratulations to Britain for running an apparently clean election in which the guys in charge really didn't want it to turn out this way, but they allowed the voice of the people to be heard. So that's really impressive, I got to say. And probably wouldn't go that way in the U.S. I think our guys would just steal whatever election they needed to stay in power. But
yeah, just like we saw with Bernie Sanders and, what's going on with the Democrat campaign at the moment.
Yes, yeah. So, they deserve admiration for allowing a vote to take place that really caused a lot of trouble for the guys in charge. Cameron is out now. The Prime Minister just quit. And so now there's a scramble for who takes over next. But anyhow, it's important for several reasons. One is that now Britain is going to have to spend the next couple of years disentangling itself from the EU, which is going to create a drumbeat of not necessarily disturbing, but sometimes disturbing news. Where it's not as simple as it seems, and so it creates uncertainty. Markets hate uncertainty. But the big reason is that this is just the first domino to fall now. Lots of other countries within the European Union have political parties with Brexit-style platforms. In other words, they would like to leave the European Union or the Eurozone or otherwise change the terms of the arrangement that they have. And this gives them, this just turbocharges their campaigns, because now it's doable. Not only can you get something like that on the ballot, but you can win.
Yeah.
So you've got, the Northern League in Italy and the Five Star Movement. They have two parties in Italy who are both kind of Brexit-like. They would like to maybe go back to using the lira and allow themselves to devalue their currency anytime they want to, and instead of having to live under a strong currency like the euro. And a Dutch party, the Dutch Freedom Party, just announced that they were going to try to put a referendum on the ballot to pull themselves out of the EU. And then Marine Le Pen, of course, in France, is anti-EU and anti-Euro, and she's the most popular politician in France right now. So basically what Brexit did was set the stage for several years of new political chaos as all of these referendums come up, and we don't know if they're going to win or lose, and what happens if France pulls it, that kind of stuff. And so there's never going to be a dull moment, never a moment of rest in Europe for the next 2 or 3 years as all this stuff works itself out. And that's terrible for financial asset values, because they, bonds and stocks, they want stability, and they're not going to have stability now.
John, what does this mean for the establishment? I know you touched on it, but I got to point this out. I mean, earlier in the week, it seemed like something very strange happened. All of a sudden, the polls started to come in showing the Remain camp gaining almost like a mysterious strength with a pivot over the weekend. Gold started to pull back and the market started to rise. The fear-mongering for the establishment obviously, in the end, did not completely ensure the Remain vote. So, I mean, please expand on what this means for the establishment, and was it odd to you what happened over the last, let's say, week here with the markets and the sentiment regarding the Brexit vote?
Yeah, it was odd, and it was really disturbing because the Leave side started to gain some traction, and they were up in the polls. And then at the perfect piece of timing, a politician was murdered in the UK by somebody who was yelling Leave-type slogans. In other words, it looked like it was a political assassination on the part of somebody from the Leave campaign against somebody in the Stay campaign. And so that shifted the momentum back towards Remain. And then, right up until the polls opened, everybody had Remain winning. And so the outcome was a big surprise to everybody who was doing polling and tracking the odds makers and everything in the UK. And so it was hard not to see that as kind of a false flag, that assassination as the establishment sacrificing one of its own in order to maintain power. And that's incredibly disturbing, But if you look back through the history of major Western governments, you see false flags like that all over the place. And, the U.S. and the major European countries have done things like that before, and it's been documented. That's not tinfoil hat kind of rhetoric anymore. It's just out there in the historical record. And so, when something like that happens today, it's hard not to look at it in terms of the historical pattern of stuff like that happening. But, it didn't end up winning it for the Remain guys. So, again, the voting at least looks like it was honest. And that's a big deal.
John, so I'm wondering here, because Brexit did go through, there was a yes vote, and the anti-establishment won here. Do you see the governments and the people in power allowing this to crash and the markets to crash without using interventions to save it, just so they can blame it on the fact that the non-establishment did what they did and they will need to pay the consequences as a result, and pin all the blame which they created, all the problems they created as a result?
Oh, yeah. Well, that could be one of their endgame scenarios where they just throw up their hands and say, all right, let's just let it fall apart, and then we'll find some bad guys to blame it on, like speculators, for instance. Remember in China they made not only short selling illegal, but they made actual selling illegal. They told the mutual funds, you can't sell your stocks anymore during China's most recent crisis. And in the U.S., we made short selling illegal. back in 2008, 2009 for a while. So in that sense, we created a narrative in which there are bad speculators out there who are responsible for crashing the market, and the government can be the good guys who are swooping in to protect the little guy. Well, obviously that's not true. Obviously, government policy is the cause of our problems, but most people won't get that. If it appears that speculators are destroying our nest eggs, then it's possible that public opinion can be manipulated in that way. So yeah, I think it's one thing they might try. And it definitely wouldn't put it past them morally. They'll do stuff like that and much, much worse if that's what it takes to stay in power.
Yep. What is it going to mean for Britain now going forward? Is this, in your opinion, going to be a good thing for the country going forward? I mean, obviously, with all the fear-mongering that has gone on, the IMF said that their GDP over the next few years is going to drop anywhere between 1% to 9% if they leave. And, what are your thoughts? Do you believe that there's going to be a net benefit for the yes vote that we saw?
All right, 2 or 3 things about that. One is that nobody knows what any of this means. The IMF and the Fed and the Congressional Budget Office and, name the major economic institution out there, has a horrible track record for predicting anything. Go pull up YouTube videos of Alan Greenspan and Ben Bernanke talking about the most recent credit crisis, and they were totally clueless. So when any expert says, "Oh, it means this," you take it with a grain of salt. They don't know what they're talking about. They're just getting paid to have an opinion, but they don't actually know anything. All right, and also remember that this is taking place in the context of an ongoing, accelerating global credit crisis. So whether Britain stayed in the EU or pulls out of the EU, there's still a global crisis out there, and Britain is part of it. So it's going to be hard to separate out what effect is attributable to Brexit and what's attributable to the bursting of the money bubble, and the global crisis that's inevitably coming. So I think Britain is in crisis regardless of what they do, but not necessarily because of Brexit. It's just that we're all headed for a crisis. We've all borrowed too much money, and the inevitable consequence of that will be really, really bad things happening in the financial markets for the next few years at least.
Mm-hmm. So, along those lines, do you suppose there will be a reaction from central banks as a result of Brexit, or just the overall credit expansion as you described, the fundamentals that are just kind of bursting here?
Oh, yeah. Well, again, they were going to do even more crazy experimental monetary stuff regardless. And I think this just lights a fire under them now. If they weren't feeling a sense of urgency about the bursting of the global credit bubble before, they really are now. Because already it was clear that in order to keep the Eurozone together, the European Central Bank was going to have to devalue the euro really aggressively, because that's the only way you can keep Italy and Greece and Spain and Portugal in the same system that is run by Germany, right? Because these Mediterranean countries can't function with a strong currency. So the only way you keep them from imploding, and I'm not sure you can keep them from imploding at this point. The Italian banking industry has non-performing loans at like 16% of the total, which is usually, that's the death of a single bank when it reaches that point. That's the whole banking system in Italy. So if there's any chance of keeping the Eurozone together, you've got to radically devalue the euro. And so that's coming regardless. So the fact that the EU is unraveling probably speeds up the timetable now, because they're going to do, as Mario Draghi likes to say, whatever it takes. And it's first of all not clear what it's going to take, because they already did negative interest rates, and that didn't work. They've already run insanely large deficits if you include unfunded liabilities of the European pension system, and that didn't work. So they only have that one tool, easy money, so they'll try it again on a bigger scale, but it's highly likely that it won't work again, and it'll just cause a bigger problem somewhere down the road.
Mm. So John, I want to get your overall concluding thoughts here. What are you looking for going forward? What is the next things that you're kind of is on your mind regarding results of this? Are you looking at the equities? Are you looking at precious metals here? Certain currencies. What's most important for people to be kind of focused on and positioned on right here in 2016?
Well, all right, let's posit that we're going to see growing chaos going forward, whether it comes from politics in Europe or the credit bubble bursting in China or the U.S., all of our financial problems starting to bubble up, whatever. We're going to see increasing volatility and what we might define as chaos at some point in the not-too-distant future. That's bad for financial assets in a lot of ways, because financial assets, generally speaking, pay you in fiat currency, right? That's what a bond does. It gives you so many dollars or euros or yen per year, and then gives you back your capital in dollars or euros or yen at the end of the term. And so if we're going to see a currency crisis in which various currencies plunge against various other currencies and against real stuff, that's really bad for bonds. And it's good for some stocks and bad for other stocks. So I think there's going to be a transfer of money out of financial assets and into real assets as people realize that, okay, governments can create a whole new currency they want to, and they're really going for it, but they can't create more gold or silver or farmland or oil wells. And so let's put our money over here where the supply of the stuff we're buying isn't just going up exponentially. And let's take our money out of the places, bank accounts and government bonds and junk bonds, things like that, where the supply of currency is increasing exponentially. And so probably what we'll see in response to the political and financial chaos that's coming is a shift into hard assets. And that's really good for precious metals, obviously. After you and I get off, I'm going to post a couple of comparative stock tables where I list the big banks, what they're doing today, and the major gold and silver miners, what they're doing today. And so you see a big difference. The banks are tanking and the gold and silver miners are spiking, and that's what happens in this kind of an environment. So I suspect that that's a glimpse of our future right there.
Well, everyone, if you want to get that research, definitely visit dollarcollapse.com. John Rubino, thank you so much for coming on the show with me today and just giving us amazing insight and your thoughts on this evolving news that we're seeing. This global crisis that's just unfolding here. So, John, thanks again for coming on the show.
Thanks, Kenneth.